But big news over the weekend was that Saylor MicroStrategy purchased another, I think it was $1.1 billion worth of Bitcoin. $1.1 billion worth of Bitcoin. And what'd the price do? Nothing. Which made a lot of people question, is there something going on in the market? Is there some manipulation happening? And is Coinbase creating paper Bitcoin? That was kind of the debate over the weekend. And we saw something else happen on Friday, which I do want to bring this up. Our favorite BILF in Bitcoin. Kathy Wood. Kathy definitely would. ARC21 shares Bitcoin ETF is transitioning its custodial services from Coinbase to Anchorage Digital Bank and BitCo, emphasizing that diversification enhances the safety and security of our offering. So that's great news. Last week we talked about the problem with centralization, the problem with Coinbase holding the majority of the Bitcoin. I forget how much they have, but I'm pretty sure it was over 2 million Bitcoin that Coinbase was responsible for, which is an absolute liability in Bitcoin. That's way too much Bitcoin for one company to be holding. So there were some question marks over the weekend in terms of them actually having the Bitcoin. And I saw a post. I'm going to maybe try to find it here quickly, because there was a Brian Armstrong, the dinkhead from Coinbase. He came out with a tweet talking about this and replying to it. I'll see if I can find it here quickly and send it to myself. I looked at it this morning. Okay, I'm not going to bring it up. I'm not going to send it. I'm just going to read it. So this is what Brian Armstrong said. This is the CEO of Coinbase, the guy who's holding all of this Bitcoin for these different clients. So this is what he said in a tweet. Baldylocks here. It's real professional there, Brian. Baldylocks here. Not sure what this is all about, to be honest. All ETF mints and burns we process are ultimately settled on chain. Institutional clients have trade financing and OTC options before trades are settled on chain. Okay, let me read that again. Institutional clients have trade financing and over-the-counter options before trades are settled on chain. This is our norm for all institutional clients. All funds are settled in our prime vaults on chain within about 1 business day. If you want audits, Deloitte audits us annually. We're a public company. I doubt any of our institutional clients want people dusting all their addresses, and it's not our place to share for them. This is what it looks like when you want a bunch of institutional money to flow into Bitcoin. And as for the central bank Bitcoin, yes. Or is that Coinbase Bitcoin? CB? Yeah, I think that's Coinbase Bitcoin. Yes, you're trusting a centralized custodian to store the underlying Bitcoin. We've never claimed otherwise. Baldylocks. So basically what he's saying there is, yes, we're not telling you how much Bitcoin we have here. He says that they don't want their institutional clients to have their addresses known, which I don't think that would be the case, because the institutional clients wouldn't have their actual addresses in there, would they? Because it's not you can't actually take the Bitcoin. It's all just paper. So basically what he's saying is, yes, if you're holding with Coinbase, it's centralized. No one's going to know how much we hold, and it's not going to change. So to me, we're going to go through these things right now. Like, we're only 7 months or 8 months into this ETF, right? And so everything's brand new. Everything's all still kind of getting sorted out. There's a ton of money that has not come into the market yet, because they're either not allowed to, or they haven't got their shit together fast enough to be able to do so. But there's going to be a lot of changes. And one of the changes is going to be that, yes, Coinbase is the #1 exchange right now. Yes, that's where the majority of these ETFs hold their Bitcoin. But is that a forever thing? No. Because what's going to happen is there's going to be companies like Fidelity, probably like ARK, Bitwise, I think there's already one or two that already show their actual Bitcoin addresses, which makes the most sense. If you're putting your capital into an ETF, you don't want to just trust them. You don't want to just put blind faith into these people. That's the whole point of Bitcoin, for one. And you should be able to see where the Bitcoin is and how much there is there. So yes, this is a problem. It won't be a problem forever, because eventually, if something were to happen, people are just going to move. They're going to sell their shares from BlackRock, and they're going to go over to Fidelity, or they're going to go over to Bitwise, or whoever, VanEck, whoever is actually showing their proof of reserves in terms of actually having the Bitcoin that they claim to. That's where the money is going to flow into, especially if there's any sort of doubt being raised. And there is right now. There hasn't been any sort of like major event that would trigger any massive movement, but there are question marks right now. And I think that if something is to happen, that money is going to flow out of BlackRock, or BlackRock's going to change their custodial provider from Coinbase. They're going to have to show proof of reserves eventually. We're just very early, and people don't really know what's going on yet. They just see the Bitcoin bull run is coming, the halving happened. They're putting their money in there. Nobody really understands what's going on in terms of actually having the Bitcoin. So there are ETF providers who are already doing this. And I think that if they want to be competitive, every single ETF issuer is going to have to do this. El Salvador even has this. They have Bitcoin bonds. They want people investing in El Salvador. So they have their own pretty much mempool where you can go to their site and see how much Bitcoin they have any given day. And I think that'll eventually become an industry norm, but we're not quite there yet. So big shout out though to ARC21, Kathy Wood, for making the move. And maybe that's the first of many to come in terms of moving it away from Coinbase. And in this case, they moved it to Anchorage Digital Bank and BitGo. So that makes sense. And it's even good that they have two options there. I think that you have the asset there, but you can diversify in terms of who's holding it, the custodians. You want to diversify the exchange you use, the wallets. You don't want to have all of your Bitcoin in one spot. Even if you're just somebody like me, you don't want to have all your Bitcoin in one wallet. You want to spread it out a little bit. So, and if anybody watching this right now has Bitcoin ETF with like BlackRock or somebody who's holding their Bitcoin at Coinbase, the best thing that you can do is just move it out of there. And if you're somebody who uses Coinbase on a regular basis for like your exchange for buying and selling Bitcoin or holding Bitcoin, just get rid of Coinbase. It's the same as anything. The more we just continue to use these corporations like Coinbase, the more power they have. If you don't like something, if you want things to change, just move away from it. The only thing that keeps them relevant is people actually using it. So that's the same with anything really, but I think that it's a good practice for moving out of Coinbase.